Hello and welcome to a new episode of Under 360 English. Today we are going to discuss about how to trade in T2T stocks. The equity segment, also known as the stock market, generally has several segments that are controlled by the SEBI, such as rolling settlement, institutional segment, or QIB, qualified institutional buyers, or qualified foreign institutional segment, etc. etc. So one of these many segments is trade to trade segment, usually called as T2T. So before we get into the subject more detail, let's try to understand what makes the T2T segment so unique and why it has been introduced to the equity markets. The T2T segment, where shares are traded only on a delivery basis. That means the delivery of the stock cannot be taken on the same day. Also, they are not eligible for intraday trading also. So intraday trading is nothing but buying and selling the stock on the same day itself or within the trading hours. But this is not possible in the case of T2T stocks. Now let's try to understand what are the criteria for shifting the shares in the T2T stock segment from the regular categories. The first criteria is about the PE of the stock. This is one of the main criteria. For example, in the case of BSE, if the Sensex PE is within 15 to 20 and if the stock has a PE, price earnings, of more than 30, means the stock may be considered for moving into T2T segment. But you have to keep it in mind that this is not the one and only criteria, or sometimes this criteria itself need not be justified to put that particular scrip or share of a company into T2T segment. The second criteria is the price variation. If the price variation of the stock is nearly 25% or more than the Sensex or the particular sectorial index to which the benchmark belongs to, and that will be considered to change to the T2T segment. And the third criteria is the market cap. If the market cap falls below 500 crores, then it will be considered for shifting the T2T segment. Now the question is, what's the need of creating a separate segment called trade to trade or T2T? The ultimate aim is nothing but to avoid the speculative trading from the market, and in that way the protection of investors, especially the retail investors, can be ensured. Because when market cap is less, now volume is less, the price variation is high, in that case there is a higher probability of manipulation of price of a particular share. Usually when the review takes place, when the decision to take which all company shares should be changed from T2T or to T2T. So moving of these kind of shares to and from T2T segment is based on the fortnightly assessment basis. So whenever a stock is moved to the T2T segment, the price filter bands, that's the circuit bands, are fixed in the scope of plus or minus 5% for at least 22 trading days, not 22 days, 22 trading days. So this guarantees the stabilities in these kind of stocks. One more thing you have to keep it in mind, that T2T segment is not the set category group of shares that you can find it in BSE. This is different from that of Z category shares. Now the question is how to trade in T2T segment. If you are looking to buy shares in T2T segment, you need to pay the full amount. Margin is not applicable, and take the trade as delivery. Also, you have to carefully notice that while selling the shares, you have to check whether the delivery had been come to your DEMAT account. Without that, you can't sell T2T shares. Also, once the shares are sold, no netting off or intraday trades are not allowed. If you sell it the same day, you can't buy it back. So therefore, it is very important to ensure that the investor has delivery in their DEMAT account, as I told you earlier, and can give it to T+2 date. If not, the shares will automatically go for auction, and that may result in the penalization charges and everything, but that may incur loss generally. In T2T segment, payment of amount and delivery of shares, that is mandatory, and each trade has to result in delivery towards the end. So there is no scope for covering the position by the investor or buy today and sell tomorrow, BTST or STBT possibilities are nil. Now the question is, what's the advantage of it? The main advantage is the price protection. If you are a risky investor, if you are an adventurous investor, you can invest at the same time T2T shares that gives much protection to your investment because the price movement is capped. So I hope you got a basic understanding of what is T2T segment. With this, we are winding up this episode. Meet you in the next episode. Till then, bye from Anu.